bring in our featured guest this morning. It's Greg Taylor from Purpose Investments. Greg, it's great to see you.
Great, thank you.
Never a day goes by where we don't have to see market reactions to the latest trade worries. How do you feel about this latest headline?
Well, it just kind of came out of the blue. I think everyone's thinking that we were going to get more of a calm period. We saw that the markets had that reaction to start March, and they pulled back. And they're starting to question whether the Trump put was back in and whether he was going to start to lay off and start to talk about the good things that the market rallied on when he first got elected. But these headlines over the last 24 hours have kind of caught everyone off guard. And it does set up that we're going to get some more volatility, and we'll see if there's another test of Trump again in the markets.
You know, the fact that this is very specifically a story about the auto industry, and we talked about how big a part of the Canadian economy it is and how the Prime Minister now is stepping off the campaign trail to deal with this issue in Ottawa. You know, what are you thinking about the outlook for Canada's economy at this point?
Well, it's not great, and that's the problem. And the only good thing, I think, coming out of this is it does feel like the country's finally getting together and working on productivity enhancements, and maybe this will bring everything together and we can actually, with a common foe, start to do some good things. So that's the positive, but that's not going to be fast and an overnight switch. So this is definitely a risk right now, and it's going to hit consumer sentiment more than anything else.
All right, well, we've got full team coverage of this developing story, and Bloomberg is covering all aspects. We want to go to Washington now, where Bloomberg Washington correspondent Tyler Kendall is standing by. She's at the White House. Tyler, obviously we mentioned the markets are responding to these latest headlines. Can you give us a sense on how we got to this point as best you know it?
Yeah, hey, John. Well, importantly, when it comes to these auto tariffs, President Trump says that he plans for them to be permanent, that he has no intention to negotiate them. We know he said yesterday in the Oval Office that he spoke to the big three automakers, and he told them that if they want any sort of relief, they have to move their production to the U.S. We know going in to today that those automakers had lobbied him for a reprieve, but at this point, he says that he doesn't see any further relief for them unless they move their production and also their product lines, those specific auto parts, to the U.S. Now, as you well know, this could really complicate matters, particularly for North American car makers, considering that the supply chain is so highly integrated across the border. I would want to pull out some interesting details. If you look at the executive order closely, it does say that the U.S. does plan to tariff the non-U.S. content in USMCA compliant cars, but that as of now, USMCA compliant parts will not be tariffed while the U.S. works out a process to identify what is U.S. content and what is non-U.S. content. So a little wonky, but does give us an important distinction there about how this administration is thinking about its current trade deals like the USMCA. So a big escalation here, John, particularly, in fact, that these auto tariffs will be stacked on top of the existing levies as we look ahead to next week.
Tyler, I really appreciate that breakdown because it was interesting. We were talking to one Washington strategist yesterday who was making the argument that we could potentially, despite the worries around so-called Liberation Day, see some common ground between the White House and perhaps countries like Canada on anything that is USMCA compliant. I know in Bloomberg's reporting, there are a lot of questions this morning about other industries that we have to be watching as well. As we head into next week, are we going to be adding to the conversation beyond autos? Like, what's the next piece of this tariff uncertainty to be watching for, in your opinion?
Well, John, our reporting indicates that the future of sector-specific tariffs will not come on April 2nd, but that they could be close behind. President Trump has floated that he wants to see tariffs on chips, pharmaceuticals, as well as lumber. Our Bloomberg reporting indicating that copper tariffs could be coming quickly as well. But we have gotten so much mixed messaging from this White House. Just take yesterday's announcement as an example. President Trump saying that he plans to be, quote, nice and, quote, fair, and that actually he thinks the markets are going to like what he ends up doing, that a lot of people are going to be surprised because they're going to take a more conservative approach when it comes to the so-called Liberation Day on April 2nd. That did appear to suggest that this White House isn't going to do an exact tit-for-tat response when it comes to those trade barriers from other countries and the reciprocal tariff plan. But then he went on to say that all countries are going to be impacted. That doesn't necessarily go with what we had been tracking after Treasury Secretary Scott Bessent, for example, said that the U.S. was going to focus on the top 15% of trading partners that make up the bulk of that trade imbalance with the U.S. So a lot of back and forth, a lot of uncertainty here. But at the moment, President Trump saying that this is twofold, that every country will be impacted, not just those big trading partners, but at the same time, those tariffs could be less than expected. We're just going to have to push ahead and wait to see how this all turns out next week.
Hi, it's Greg Taylor. I'm a portfolio manager in Toronto, and I just have a question that this does absolutely affect Canada and Mexico, but this also has an impact on Michigan and U.S. big companies. Are they going to be lobbying to push back against this as well?
I mean, definitely at this point, they already were lobbying. We knew that back when President Trump delivered his State of the Union address, his first address, his joint address to Congress, what we call it, during his first term, he had said that the automakers had called him up directly and that they were seeking at least some sort of carve out. And that's how they got that initial 30-day reprieve. But particularly when it comes to U.S. automakers, we're already starting to see those lobbying groups sound the alarm that domestic prices could go up even for those domestic-made vehicles, because the supply chains are so integrated here. And we have to keep in mind, in the background of all of this, is that President Trump did campaign on his economic policies. Particularly inflation is such a big issue here in the U.S. and whether or not that will pressure him as we start to see consumer sentiment decline. Even the durable goods data from yesterday give us some indication that people are front-loading their purchases in a bid to get ahead of tariff uncertainty and rising prices. Could that put on more pressure on this White House to potentially issue those exceptions or those carve-outs? We'll have to see, because up to this point, they're showing that they have a little higher tolerance for this as they try to push that this is part of that longer pro-growth agenda, as they also we'd be remiss if we didn't mention this is all going to go hand in hand with that tax cut agenda that they are putting forward too, but that's an entirely different conversation.
But a good point, Tyler. Thank you very much. Tyler Kendall, Bloomberg Washington correspondent, with the latest on the tariffs from the White House. Very much appreciate her coverage. And we're going to put it all in context with this broader market uncertainty. Greg Taylor is with us for the hour. We're going to take a quick break. Greg, talk a little bit more about how your position